Hello, baby dolls! The Great Depression! I hear about the Great Depression every week. There's always a bear. They always fractal the Great Depression. I'm going to show you the information I know to help you navigate the crypto space and life. And for some reason, Erection 2 is trending. Man, my Twitter feed goes nuts sometimes, friends. Okay. In finance, markets, there are always people who go back to the Great Depression and they anchor it. Okay. So I'm going to show you this beautiful chart here. It is the gold to Dow Jones ratio. But first, let's have a look at the Dow Jones by itself in the Great Depression. And here we are. So this was the Great Depression, okay? So the Great Depression was everything was going fine and then everything stopped going fine and it went down. So it's obviously such a huge drop, 90% down. And it took a long time to recover. So if you even draw the top, it took 17 years. 17 years to get back there. It was crazy, man. It was just wow. So this is not normal. This is a time when things were set up differently. I explain all of this in a beautiful tweet for you. Look at this. In the Great Depression, we were on a gold standard. Okay? A gold standard. Don't worry, we're going to go through exactly what this means. All right? Look at this. They did not print money fast enough, so everything repriced lower. Okay? So you had your gold. Houses dropped 90%. They didn't, but around that. They dropped a lot. And then you could buy now way more of a house by holding the gold. But everybody had nominal price crash in their portfolios, so everybody lost their minds. It was very, very rough, okay? I think houses dropped maybe 30%, 40% during that time, and stocks went 90%. So look at this. I have this chart for you. Gold pumped 850% against stocks. Would you believe it? Right? Because gold held its value, all right? So this is why it's different now. We are on a different system, friends. We're on a fiat system now, okay? When the market goes down, the printer activates. And there's a different reaction function from policymakers, okay? So I have this beautiful chart. We're going to go through all of that, friends. So this is gold versus stocks. If this chart goes down, it means gold is getting weaker to stocks. And if it goes up, it's getting stronger. So I have the Great Depression part here. And look at this. It went up 850%. Isn't that crazy? So stocks went down that much. You became heaps rich. You literally became 10x wealthier just by holding gold. See, that's why gold bugs, they love this thought deep down. They really do. They don't wish bad upon everyone, but that's why they're always frothing at the mouth. Yes, the system's gonna collapse. This time is it. You're all trapped. Here we go. If you notice all the gold bugs, that's their headlines. It's because of this. That's why. They know in a collapse, they are protected. They have the insurance against the collapse. So when the collapse happens, everything reprices lower to wipe out all the leverage and kaboom, they're 10x richer. It's literally a dream. All right. Now, you also had a run in the 1970s when everybody thought inflation was getting too hot, and it was. And they're reliving that moment. I mean, it's been a long time, friends. Gold's been holding on to it for a long time. So gold held value against stocks. Stocks got absolutely obliterated. So we have the Great Depression here, and it went all the way down. This is just stocks. So if you were just in stocks, you got wiped. Everyone got wiped. You know, here, there was heaps of leverage. It was something ridiculous. I think the number was 12% of the economy was just leverage, margin, stocks going back and forth. I'm not joking, by the way. It was a number that absurd. Of the GDP, I'm going to repeat that again, something like 12% was just people leveraging on the stock market. That's how much this bubble blew up. For reference, you've heard of the NASDAQ bubble, right? The tech bubble, which happened in this one, right? This is for the tech bubble. It peaked at 3%, just to let you know. Okay, so even at the top of the Nasdaq bubble, which was the bubbliest of bubble of all bubbles and internet and, the fourth industrial revolution with technology, that still hit 3%. Okay, so just to let you know, and we never even got there in 2021. I think we hit like 2.5 or something. So these numbers, the central banks, they watch these numbers, friends. They watch them and they know, hey, the people are getting too bubbly now. We've got to crush them. But they don't say that to our face. But that's what they're actually looking at, okay? And you will do that too. It's like if too many people have their clothes off and they're drinking and they're partying and no one's showered and it's been 2 days, you're like, well, go have a shower, get the hose on the underarms and get out and come back tomorrow, all right? So the Great Depression is the anchor, but it's different now. See, but I hate using that term because that's top signal, right? When we say this time is different, okay? In the Great Depression, when stocks collapsed, gold was not allowed to reprice, okay? So stocks went all the way down, gold held its value beautifully, right? I'll even show you on the chart. And I've brought up gold here for you, baby dolls. This is gold, okay? So we're going to go to the Great Depression. I'm going to put this on a line chart so you can actually see better. So here's the Great Depression right here. Gold was $20 to $22. See? Gold stayed the same. So if you had all your wealth holding the goddle, you left it the same, even though everything was collapsing around you. But what happened next? You see, oh my God, a spike happened next. Yeah, because they took everyone's gold. They reconfiscated everything, friends. This is why gold people froth at the mouth. Because they know, oh my God, they're going to confiscate the gold. And then, so what they do is they take it off you and then they reprice it higher. Because there's just so much debt around. They have to pay off real money. So this is the problem with that scenario. The scenario, look, it's great everything works. But if humans do the bad doo-doo stuff, if they get naughty with leverage and we bite off more than we can chew, then this is what happens. You got a system where everyone's number goes down, but the people holding the real money, their number stays the same. It's the insurance. The insurance pays off big time. So then you can rotate your gold and go buy everything for 10x cheaper. That's why everyone, as a gold bug, talks about this scenario. They always talk about it. You got to hold gold, self-custody, keep it, don't trust the government. But, different system, right? You recall me saying we're on a fiat system now. They could not print money because it was a gold standard. We were on a gold standard, friends. So if we go back to the Dow Jones here, back in that time, okay, when we were going down, the leverage that was getting wiped out, they had gold in the vaults. There's going to be a gold trophy. There's going to be a gold trophy, friends. They had gold here in the vault, and they have paper claims on them. They have the cash, all right? And there was only there's 5 units of cash here. So when everything started collapsing, what we do now is we make, we just go, hey, let's just make these. This is what we do. This is literally what we do, by the way. That's what we do today. Yeah, it's funny. Friends, if you knew what these people are doing behind everyone's backs, it's nuts. Okay, so they just go to their computer and they just, okay, you're richer now. And the beautiful thing is, we don't have a gold standard. So this is gone. Woo, gone off the screen. So it's just paper claims now. Paper claims on nothing, right? But when they had the gold system, they couldn't do this big part. When they had the gold system, all they could have was that part, right? That's all they could have. They can't make any more. So when everyone gets wiped out here, right? How do we recover? We recover by, unfortunately, people dying. Literally, people getting crushed out in their jobs, in their businesses. All the leverage gets wiped. All the funds, everything gets wiped. All the businesses. That's what would happen today. We have a lot of pension funds, even more leverage, right? That's the scenario you'd be looking at. if they let everything reset. Because the market went to fair value here, okay? This scenario you're looking at, okay, this is why investing's scary, but it's not. It's scary because if they do nothing, the politicians, we're going to get this, by the way, all right? Yes, we're going to get this if they do nothing. I promise you that. Because the fair value of everything is to go lower. So you can even look at most houses out there. Most houses, their fair value is only approximately worth what the median wage of the person who can afford it is without leverage. Okay? That's what the fair value of a house should be. Oh, it takes a person working a factory job in a certain city. Should take them like a couple of years to buy it. That's what it should be. But we have leverage and banks and everyone giving them access to credit now, and it helps fuel the asset of the price of houses going up. But if they weren't there, if you actually did nothing, yeah, man, everything goes down. That's just the reality of it. That's why they can't let the system collapse. They don't. And they don't let the system collapse. Back then, everything was bound by gold. You couldn't make more paper claims. But now, there's no gold standard. Now they just go, screw it, you're all more rich. Woohoo! Party for everyone, right? So, a lot of gold people, they're like, oh, this thing, it can't work forever. It's true, but friends, money's just a meme, We know money's a meme. So, this is why the system is very fragile, okay? It's very fragile. Even though, yes, they're putting up interest rates, whatever. It's because what they call, it used to be gold here. What they call collateral is basically nothing. It's just like bonds, which is more fiat, and, T-notes, more fiat, and, euro dollars, which is more printed fiat. It's just fiat rehypothecated everywhere. And what they do is they say, well, look, we have a country, we're America, and you have a country, and you're South America, and, there's Canada over there, and there's China. Your collateral is actually your ability to trade. So that's how the meme money's morphed over time. You know what I mean? It's like each country has its own use case in the world, and they can leverage on that. So that's why this experiment with all this printing, we don't know how that would have all played out. So in the event of a Great Depression, we saw, man, like this ratio. That's why ratios are beautiful. You get to see what actually happened. Gold killed it, man. You went 10x richer as everyone got poorer. That's the destruction, right? So that's why the whole game now is when we go down. So this is the Dow Jones. When they go down, man, there's always a rescue package, right? This is when debt was low. Okay, the debt was low. They were able to raise rates in the 70s. Now that that's really high, friends, this was basically the end of the world. This was when it was happening. So this was the GFC. Everything froze. This is where it should have went. Oh my God. Yeah, we should have went down there. If you reset everything, friends, that's where we should have went. Goldman Sachs, JP Morgan, everyone, that's it. They took on too leverage. Everything went to zero. Goldman Sachs, they were actually worth zero. They had to go down the fair value, but they didn't. What happened? The intervention. That's when they said, that's it. Ben Bernanke came out and he said, that's it. That was the last failure. No one's failing from here. Okay, so really what he did was he went to the computer and he said, well, you guys have, all the banks, right? You guys owe like 5 units of cash, but what you really have is, you have 2 units of cash. But what we'll do is we'll just print the currency, okay, to give you like this many, right? That's what happened. That's all they did. They go, hey, we can do that, and that's it. And to not spook the people, they gave it a different name. Quantitative easing, rescue package. So they give you these names because everything is based off faith. Remember, in the gold standard, you didn't have to trust the fiat because you are trusting gold. You are trusting 2,000, 5,000 years of store of value. You don't have that anymore. Now you're just trusting this paper. And we did not know how the system was going to play out in the event of a crisis. So based off the network effect, you can now see how it plays out. As long as the system doesn't really get exploited, people are willing to do whatever it takes to save the system. Okay? Because people have lived their whole lives in countries, trading, jobs, they've had kids. They're like, man, I don't want to see everything we've built just go to the floor. I don't want to live in that world. Let's do whatever it takes to save everything. And that's the human ability to keep pushing forward. So, but this experiment, man, that's why we have crypto now. That's when Bitcoin was made here too, friends, right here. Bitcoin Satoshi was like, yep, I know how this experiment plays out. You guys are just going to keep printing money to save yourself every time from every crisis. And is that not exactly what we've seen, friends? Is that not exactly what we've seen? Okay, we have done the printing here and the printing here. And then you have the printing for the zombie virus. You know there's going to be another round of printing. They have to. The debt's too big now. It's a one-way ticket. It's a one-way ticket. So there's always going to be a crisis. But now we know they're going to keep printing the currency. And they're locked up. And gold is very, very good to hold. So we don't know. What's the future for crypto going to be? Are we going to follow the gold path? But unfortunately, we saw, right, when stonks go down, this red candle, crypto pooped the bed as well. And here too as well. Okay, this is a 3-month chart. So unfortunately, we are tied to the hip of the stock market. But the beautiful thing is, we know when the stock market goes down, they have to save it. Everybody is leveraged long the whole financial system. They're told to take on leverage. They're told to do it. So that's the system we live in. That's the reality we have to exist if you want to be a crypto holder. Bitcoin, Ethereum, whatever it is, everything in between, we understand now, and I understand especially, we are a sexier version of the stock market, right? The stock market's for boomers, for people who don't want to retire. We have to get saved with the stock market. That's a beautiful thing. That's the best place to be. Because do you think we're going to be in a world where they don't save the stock market? Do you honestly think, right? Look, if they threw in the towel at 50% and we bounce back, what makes you think that they're going to let it go the next time? They're not going to do that. Are you going to vote for a politician who does that? I'm not. I'm going to vote for the politician who says, I'm growing a mustache, I'm going to give you a free pizza coupon, and you're going to get 2 public holidays. Sweet, you got my vote. And he says, oh yeah, I'm going to save the system as well. Sweet, do it. You know everybody's going to vote like that. Okay, we all understand the game. So they're not going to let this go all the way down and let the gold guys kill it. They're going to keep this system and do whatever it takes. Which means, yeah, there's going to be some like jitters along the way, but somewhere, right? Somewhere down the line, they're going to go, throw in the towel. We got to recover, right? Because you can't have the people riding. There's more of us than them. The pyramid structure, there's only it's so tiny compared to how many poor plebs there are of us, man, sitting around here. We are the people. They think we're scum. So this is the game in a nutshell. Everybody's looking for that Great Depression. There's always something coming. So, like I said, it is scary to know that, oh my God, fair value is actually 90% lower. It's scary to know that. I sleep every night going like, oh man, fair value is actually 90% lower. But I also sleep confidently knowing, you know how people are going to vote. You know exactly what they're going to do. They're going to print to save the system. They're going to dilute the currency, and they're going to rely on the next generation of people to basically foot the bill. Until next time, friends.